Assalamualaikum warahmatullahi wabarakatuh and greetings. My name is Aina Maisarah binti Azmi with metric number 288466. What is an investment? An investment refers to the act of allocating money, resources, or time to an asset, venture, or project with the expectation of generating a return or profit in the future. Investments are made with the intention of growing wealth, achieving financial goals, or preserving purchasing power. Investing involves putting money or other resources into various financial instruments, businesses, real estate properties, or other assets. These investments are made with the intention of earning a positive return on the capital invested over a certain period.
Hi, my name is Nur Wahida binti Abdul Wahid and my metric number is 288427 and I will be talking about stocks. So what is stocks? A stock is a security that represents the ownership of a fraction of the corporation issuing shares. The holder of stocks is called a shareholder. Shares is units of stock which gives its shareholder entitlement of a proportion of the corporation's assets and profits equal to the amount of stock they own. Corporations issue stocks in order to raise capital for their businesses, and shareholders has the right to vote in shareholder meetings to determine important company decisions. Moving on, now we will talk about the stock market in Malaysia. The stock exchange in Malaysia occurs at Bursa Malaysia, which is established in 1930, formerly known as Kuala Lumpur Stock Exchange or KLSE. It is specifically created to allow trading of Malaysian securities. The Bursa Malaysia has a fully automated trading system launched in 2008. The main stock index of Bursa Malaysia is FTSE Bursa Malaysia or KLCI, which is composed of top 30 companies on the Bursa Malaysia exchange. Before we move on to the next point, let me tell you what a stock index is. A stock index is a group of shares that are used to give an indication of a sector, exchange, or economy.
There are several risks and returns that involve in investing. The first risk is market risk. The value of investment can be influenced by overall market conditions, including economic factors, political events, interest rates, and investor sentiment. Next, inflation risk. Inflation refers to the decrease in the purchasing power of money over time. Credit risk. This risk is associated with the possibility of default by the issuer of a debt instrument such as bond. Returns. Capital appreciation. Investment can generate returns through capital appreciation, where the value of the investment increases over time. Next, dividends or interest. Certain investments, such as stocks or bonds, may provide regular income in the form of dividends or interest payments. Business profits. Investing in businesses or entrepreneurial ventures can yield returns through profit generated by the businesses.
Okay, thanks to previous presenter. Okay, my name is Tan Jian. Metric number is 279405. Now I will introduce the advantages of stock investment. Okay, there are some benefits of the stock investment. First and foremost is earning return on your stock investment. Okay, investing in stock can lead to higher return than other form of investment, such as saving account or bonds. Okay, then the second one is building wealth over time. By investing in stock or other security, you can increase the value of your holdings by compounding. Yeah. And the third one is diversifying your portfolio. Some of these may be more volatile than others, but they will offer different potential reward. Okay. Okay, let's continue with our benefit of the stock investment. The fourth one is the stock investment is liquid. It is due to there are a huge number of buyer and seller in the market for the stock, which make it easy to find a willing buyer or seller when you want to buy or sell the stock. Okay, then the final benefit is the flexibility. It allows you to start with small investment and gradually build up your portfolio over the time. Means that you can easily edit it in the future.
Hi, my name is To Kai Hang and my register number is 281815. So I will continue my part which is about the disadvantages of stock investing. So the major disadvantage is risk. The first risk is market risk. You will face the market risk if a company underperforms over a period of time. Due to market volatility, stock prices tend to fluctuate. So the stock with a higher growth rate tend to anticipate with much higher risk. Next, which is the information risk. It's difficult to find the information about the company or their prospect of growth. Furthermore, you will face the other risk, which is liquidity risk. If your stock aren't doing well, you may need to get rid of them. So you will face the liquidity risk if your stock aren't doing well. The last one is counterparty risk. You will face the risk of losing money if buying stock by a broker, since you aren't truly purchasing shares of the firm, but rather buying shares from other investors. So the other disadvantages of stock investing, such as lack of control. A company's capacity to return profit to its shareholder is heavily dependent on its business strategy and related rules. So the investor do not have the right to participate in all decision-making process. The last disadvantage is the uncertainty of profits. High volatility make it difficult to predict how much money a business will make. So there is no assurance of a positive return on investment.
I will continue about advice on stock investment. First, concentration. When we invest in a limited number of stocks, we put our entire portfolio at risk if something goes wrong with the firm. So, investing in a diverse portfolio of stocks can expand diversity and can help mitigate the risk connected with a specific firms. After that, volatility. Stock markets may be turbulent with investors frequently experience unexpected ups and downs. Next, liquidity. As we all know, investment is measured by liquidity. So, stock with a low trading volume might be more difficult to sell and constitute a risk, since we may not be able to sell an investment when the time comes. After that, geopolitical risk. Stock price usually affected by the political stability and financial stress of countries throughout the world. As a result, the difficulty may have an influence on the nation in which a firm is headquartered or the countries in which it conducts businesses. Other than that, we might also look at the foreign exchange risk. A change in the exchange rate might influence our performance returns when purchasing or selling a stock in a foreign currency. Lastly, margin. Margins means we can use cash and loan to buy a stock. To make a payment, we can open a margin account.